when you guys want. All right. So hello everybody. Today it was supposed to be the day for submitting the PPP applications. Last night the new rules were announced, and we'll talk about all that. I will update you also as I just sent to our IT person and website person some information to post on savephysicaltherapy.com under resources, a whole bunch of stuff. So I think he's doing it as we are speaking right now. But I will pose in a moment the question when we have more people on the meeting. I will pose the question if anyone has been already successful in submitting their application today for the PPP. But I just received from Bob Kawolik the new guidelines that were released last night, late last night. Bob, do you want to show us those guidelines and just tell us what was the change, what has changed on those guidelines from what we have in place right now, and then we can just share a couple of other things with people that we can.
Okay, so it's not, I'll share. And so this, first of all, this is the form 2483. The form is pretty much the same form that they had put out a few days ago.
Oh, they changed something there.
Yeah, they've added LLCs and some other check boxes up here. Otherwise, it's very similar. It does reflect some of the changes that came out in the, this is an interim final rule. If you notice, it says interim final rule, meaning that obviously they reserve the right to change the rule again. But I don't believe this is holding anything up in terms of intended, the intention to start taking applications today. It's going to be bank specific. They have provided some clarification on some things, but they definitely changed some things. This is not a summary list. I do not have available a summary list. However, I did send Dimi a presentation that lists the entire program. It is up to date through this interim rule. So if you went through that presentation beginning to end, you would have all of the relevant facts that you need to know. But this is a 31-page document that says what they've tweaked and what they're reinforcing and what they're pointing out. I can tell you the overview of what the changes are, but I can't show you something that lists them out. The big change is that in the allowable use, again, just so for context, we have three buckets, three kind of periods or scenarios here. One is what goes into determining your loan, what you can spend the money on in the middle once you get the loan, and then how do you decide, how is it determined how much of what you spent is forgivable? Those are the moving parts of this program. So on the front end, the big change is that independent contractors are clearly now excluded from being considered as employees, or the same as employees. So when you are calculating your loan amount and submitting payroll costs related, that they're going to determine your loan amount, independent contractors are out. The independent contractors will have to submit and file for their own application.
So in other words, when we calculate the 2.5%, no
2.5
independent,
times.
no, only W-2 employees are included there?
Yeah, it's payroll, and then, you know, there's still consideration for the owners if you're self-employed or sole proprietor, or, you know, that kind of stuff. But if you have, like, say, an independent contractor PT versus a W-2 PT, even though you might be paying just, you know, that individual as an independent contractor, you can't count them now in your payroll cost. So they've taken them out of the definition of what an employee is, whereas before they were in the list of what was considered a part of the payroll cost.
That changes the equation for a lot of people and a lot of practices, actually, because there are some people who have only 1099 employees. So that creates a major issue, because those 1099 people, if they are able then to apply by themselves for this, it takes away, if you want, the control that the business owner could have for providing for employing these people or contracting with these people to provide services.
Yeah, I hear you. I'm looking for the part. You know, the $100,000 amount is still the same. A lot of the calculation is still the same. But
Go ahead.
Here's the section on what qualifies as payroll costs. So it just no longer mentions independent contractors.
But commissions, how about commissions? It says commissions.
Yeah, commissions are still in there. So again, there's a lot of types of employers that pay, you know, people differently. You know, there's tips and that kind of stuff, you know, that are allowable. That doesn't typically apply to PT. Independent contractors, let's see. Do independent contractors count on employees for purpose of PPP loan? No. It's pretty clear now. They need to, they're going to do their own loan application. And this was always kind of, I believe it was expected, because they were always allowed to have their own application, but what was never allowed was that two different entities could essentially be loaned on the same dollars, right? So the way that this is looked at is, you know, I have an independent contractor, that's this individual that I pay, you know, $75,000 a year to. And if that's part of my payroll costs, they can't apply for their own loan, because they can't say, I'm normally making $75,000 a year and now I've been, you know, reduced. So the government would be paying for the same person for the same cost on two different sides of the fence. So they've put the independent contractors on their own side. So that's the big change on the front end. In the middle, the allowable use dollars are now, they're not going to allow a ratio different than 75% payroll costs to 25% non-payroll costs. So even though you're allowed to spend on rent, utilities, mortgage payment, interest, they put back in interest payments on prior debt obligations that existed before February 15th. Originally that was in, then it was out, now it's back in. So if you have a bank loan that you've been paying on, not an SBA loan, you know, disaster loan that you got recently, but let's say you had a line of credit, or and you converted to a regular kind of loan that you're making principal and interest payments on, that had to do with operations related expenses. You borrowed money for equipment purchases, you know, whatever. Then the interest spend on that is allowable use. but those other non-payroll cost parts of the allowable use spend cannot be more than 25% of the total. If they are, any amount that's over 25% will not be allowable in terms.
So what are they going to do? They're going to ask for the money back, or they're going to charge interest on that?
No, they're just not going to allow that as a forgivable part of
as a forgivable amount.
Right. So before it was like any that was all considered allowable use. So as long as you were spending on allowable uses, it was forgivable. Now they're qualifying non-payroll part of the allowable use spend can't be more than 25% to be forgivable.
1 second, because I'm getting, during this presentation, I'm getting text messages from people and emails about resources for this. I'm gonna just share something and we're gonna reshare your screen, but just give me a moment. So guys, the questions are where to find all of these resources. Let me show you something, and we're doing this actually right now as we are speaking. If you go to savephysicaltherapy.com, okay, in this site, we have a tab now called resources. In real time right now, our IT person is uploading all of this information. We have here the telehealth verification form that Bob shared with us. We have Bob's information. If you want to get from him the how do we call that? The analysis for the loan. This is the new PPP application. This is another pretty nice resource that we provide to you to look at, I'll show it to you, to look at a side-to-side comparison of the different types of loans. Then we have this final thing. Let me see, is this the PowerPoint presentation, or let me see what this is. No, this is exactly what Bob is talking about. This is the final ruling, and shortly we're going to be putting a PDF of a PowerPoint presentation. All right, so okay.
They changed the structure of the loan. It's now 1% interest rate on a 2-year. It's a 2-year.
Want to share that?
Maturity. Pardon?
Can you share that?
Yeah, it's in. Well, it's in the.
There is also a question if you can increase the salaries.
Here you go. 2-year loan sufficient. So the maturity on the loan is now 2 years. The interest rate has been limited to 100 basis. I'm sorry, somewhere in here it says 100 basis.
1%. 1%.
It is 100. It is 1%.
And the maturity is 24 months.
Yes. So the loan would be completely, and again, the loan is the non-forgivable amount that you've borrowed. Okay, so it's not the whole amount. It's what the total loan was minus the forgivable amount. That converts to a loan that's a 2-year loan at 1%. The payments will still be deferred for 6 months, but interest starts accumulating from the beginning, and then you'll pay off the loan over a 2-year period of time. And that's in my math model that we created around this loan. We had a 10-year amortization up to 4% interest. So the assumption was 4% for 10 years. So that significantly changes the loan payment. And since this is really all about looking at liquidity and whether or not you run out of cash at some point, we wanted to change the math in the model. That's already been changed. This 25% limit on the non-payroll cost also changes the math model. So we had to protect that in the workbook. So that's already been updated. I will get back to you later this afternoon, going through all the forms that have been submitted and then sending out your results, you know, with an explanation, you know, that's going to just help you understand the interpretation of all of it. And
there are a couple of questions. Let me interject for a moment. One question on the calculation actually is someone had only 1099 employees, but that person changed his employees to W-2 in January of 2020. I think they are able to use January and February of 2020 for their average.
So there's three calculations. One is how much loan can you qualify for? Now what they're saying is in the prior 12 months. So we're talking about Q1 of 2020, Q2, 3, 4 of 2019. What's your average payroll cost? If in 2019 they were independent contractors, you can't count it then. So you're only going to get the most recent quarter going into your loan amount math if they're now W-2s. The middle, you know, the spend, you're good there because, and your FTEs and all that, you would be good on. So because you can choose a comparison period of the first 2 months of this year for your FTE part of the forgiveness equation. So your wage comparison compares to the most recent completed quarter. So if you flipped them on January 1st, you've got what you need in there for the FTE and the wage comparisons for forgiveness, but what you don't have is your 2019 average monthly payroll costs. They'd be excluded there because they were independent contractors then.
I can show something on that in just a moment. I'm just trying to find it.
And again, what I would be doing is, you know, let your bank decide whether it's an allowable amount in the calculation or not, right? I'm telling you what this says. I would go to the bank and say, you know what, I had X dollars a month in independent contractor costs, which are essentially payroll. They're just independent contractors instead of W-2s. They've all been switched now. Can I count the independent contractor pay on these same people that are here today on W-2 and were here last year under independent contractor? Can I include that? Let them tell you no. But I would have that conversation with your lender, because if they tell you yes and they let you process the loan with that number in there, great. Regardless of what this says, it's going to come down to what do they do.
And probably this is the reason perhaps that they are delaying the process, because they're trying to, maybe they were negotiating in the background with the government in regards to some of these changes that they have put in place right now, like the exclusion of the 1099s, the rate that went from 0.5 and 2 years that they announced to 1% in 2 years, or the previously that they had the 10 years and all that. So perhaps this has all been getting negotiated.
Yeah, the only other change that I just want to mention, and then we're done with the changes, is before they were saying any federal employment tax was not included in the loan amount determination, and it wasn't included in the spend. And if it's not included in the spend, it can't be part of forgiveness. So they are now saying that federal employment tax is included in the loan determination amount. So when you figure out your payroll costs for 2019 and first quarter of this year, whatever you paid on FICA and federal tax is in the payroll cost. Where it's not in is just in the covered period related to the loan. So it's not in the allowable use spend, but it is in the loan amount calculation. So before it wasn't in anywhere. So they did add it into the first part of the whole equation. And that's what this 31 pages says. There's a bunch of stuff down here towards the end that specifically applies to the banks and the lenders and what's going on with them around guarantees, you know, and how's the government protecting them as the lender and all that kind of stuff. And, you know, I don't know if this is running rampant through this group like it is in some other groups that I'm speaking to on this, but if we go to the, I'm sharing right now, right? You can see my screen?
It's your screen.
So we go down here to the very bottom. It's always the stuff at the end that gets you, right? There's a blurb here about OSHA.
Yeah.
And so some people are saying, hey, make sure you're aware of all this OSHA stuff right now, because you're going to be held accountable to complying with the OSHA standards by signing this application. I've already had this reviewed by a labor attorney and a business law attorney. And it says that OSHA can require businesses to modify facilities, not is requiring, okay? It says that businesses that don't comply may be fined, not will be fined. And it says that, or forced to cease operations, right? And signing this form of certification that the applicant, to the best of its knowledge. So again, as long as you're not fraudulently doing something here, I mean, you can't even know all of these OSHA regulations at this moment when you're trying to get this application in anyway. And I believe that the idea that they're going to use this and hold everybody to this paragraph after you have the loan is contrary to the behavior across many other parts of this. They're really loosening HIPAA compliance regulations around telehealth and other stuff, right? They've rolled back what you have to do to file your taxes and pay estimated tax payments and all this other kind of stuff. And there's so much throughout this entire law that says we're not going to treat people the way we normally do with all these regulations, because the idea of this is to get people money now as fast as possible. Yet we're going to slam you on this OSHA thing that you don't even know anything about if you sign this application. And I would not interpret it as saying that. Not saying don't be aware of OSHA, don't be aware of compliance requirements. But I don't believe that's a reason to not sign this application and get the process going, even if you don't know what those things are. I don't know.
Anyway, guys, just to let you know, we're planning. We already spoke to Mary Dualong, who she addressed this issue to me in an email just a couple of days ago, and we're planning to arrange to have her one day during next week on the town hall meetings, so she can go through the OSHA component. Because anyway, you should have an OSHA training and an OSHA plan in your office anyhow. We do that, and you should have it too. So she'll go over a couple of things. And also, if everything goes well, as expected with some other issues in regards to CMS and tele-PT, we will have next week someday a representative from the practice component. Oh no, actually the director of APTA's Department of Public Affairs.
I'm not suggesting that you ignore OSHA requirements by any means. Yeah. I'm just saying that I don't think that it's a necessary step before submitting this application that you have to go become completely familiar with every OSHA requirement that you may be responsible for complying with at some point in the future as part of this application process.
Yeah. Something that I would like to ask everyone here, if you guys unmute your microphones. Has anyone attempted this morning to submit an application through your financial institutions? And have you been successful yet with any financial institution? Because at this point, as far as I know and I have searched, Chase is not accepting applications. TD Bank is not accepting applications. Capital One is not accepting applications. And Citibank is not accepting applications.
Neither is Wells Fargo.
What's that?
Wells Fargo is also not.
I heard that Bank of America, only for their members, they were supposed to start accepting applications today. But again, I don't know. This is a collaborative effort. So if somebody has information, please type it or let us know.
I've submitted the application form,
but
I don't have any response yet in terms of it being actually processed.
Yeah. And what is your bank?
I have a smaller kind of local regional bank. It's called they're just like FMB. They're FMB to me. They're First Merchants Bank is kind of they're a regional bank that bought a lot of other banks around here, so I've been rolled up into them. But I do think that the smaller banks are the ones that are really on this, and the credit unions and that kind of stuff, not these big, huge national banks.
Yeah. Anybody else?
Demi, this is Kay. My bank is a very small local bank, and they have my application. My banker, she's all over it. She sent me a list of what she wanted, and she filled out the application for me. Said it will be turned in today, but I haven't heard from her that indeed it has been submitted to SBA.
Kay, can you tell your banker that Costas and I would love to open an account in Kentucky?
Absolutely. I would love to have you.
Yeah, why not? Wow.
She did tell me that she is taking care of her clients first. Her long-term clients. She's taking care of us first. So.
Good.
Yeah,
that's
it's
good.
A great little bank.
Somebody put here Bethpage. I also saw Bethpage Credit Union included in the list. I heard, and this might be totally inaccurate, that they will not be doing it. But again, go to Bethpage website and check if they will. Costa, any information from your side?
No, nothing specific. Just I've been reading some articles around that big change that happened yesterday, and the whole thing is that the banking system wants to make sure that they're going to be protected too, because the government doesn't want to take responsibility for any activity that in the future proves that the person that got the money was not credit worthy for that money. So the banking system want to make sure that they're going to minimize their losses, and they're looking more for credit worthiness of those that they do applications. That's all it is. And again, we've got to make sure that our activity is going to be not fraudulent in any work capacity. So everybody has to play their role ethically right now.
Yeah, of course. Let me see any other questions that I can get from here. So yeah, as a business owner with only 1099 independent contractors, you cannot claim them for payroll right now. So let's think about that. Let's say a private practice owner, let's say a small outfit. Let's say a person who has two independent contractors only, right? He's a private practice owner. He has a corporation, a sub S corp under his or her name, and then this person hires two 1099 employees. Okay, that's it. Two, not employees, 1099 contractors. Okay. Now, the 1099 contractors, they'll be able to apply for themselves on April 10, right? So now the private practice owner, how he will be able to apply for anything if they only have 1099 employees?
Well, it's payroll costs, which doesn't exist unless they have some employed, admin staff or, other people that are non-independent contractors. Yeah, that's it. And if you have an
It's
SBA
interesting though, because it doesn't, you see, somebody who has W-2 payroll, right? They are not getting 100% of their W-2. They are getting, 200% of their W-2 for the month. They are getting that, plus they're getting another 50%, which they can use for utilities, rent, and stuff like that. So somebody who employs only 1099s, then they won't have that benefit of being able to use for rents, mortgages, and all that stuff. That's interesting. Unless there is some provision where they can apply as an independent contractor themselves.
Yeah, or I guess that would, and again, I'm not in that situation.
Well, it's how they pay themselves, okay? It's a private practice owner, but how they pay themselves. If they pay themselves and they get a 1099 or they get a W-2, they can include that.
Yes, or if you're considered self-employed or a sole proprietor, I don't think that you would have a sub-S classification or an LLC if you didn't really have employees.
Yeah.
Right. So it's a kind of a weird situation.
Is there anything? Go ahead.
I have a question.
Yeah, Andrea.
So if the algorithm is 2.5 times payroll, and that half is supposed to go towards your business costs, the rents and mortgages and so forth. If you don't have overhead costs, can you apply that extra half towards increasing the salary, or whatever goes into wages and salaries and stuff?
So the problem with that math is that you have a certain data set that's going to be used to determine your loan amount.
Right.
Now you would have a bigger data set for payroll costs that's happening in your spend. And if the calculation said that your forgivable amount actually calculates out to be bigger than your loan, then that can't be allowed. So you're still limited by the amount of money that you can borrow.
No, I understand that, but I'm just saying if within the amount, let's say you qualify to borrow $10,000, and $7,500 of that is for wages and $2,500 is for other expenses, for the allowable expenses, but you don't necessarily have that $2,500 of other expenses. Maybe you have $1,000 of other expenses. Can the $1,500 that would be allocated to that, can you move that over? Can you increase wages for that period of time?
Yeah, that's a good question. I don't know what their model would do if you have an allowable use on payroll expense bigger than what your payroll costs were that went into your loan amount. But I would think that, I don't know, this is my opinion, total my guess. I would think that that would still qualify as allowable use money and then could be forgiven. Because there is a scenario where, and I'm sure this is a very small percentage of businesses today, but maybe somebody out there is growing, right? They're hiring people and they're spending more money during this 8 weeks after the loan, or, you know, they're not going to allow you to have that math result in a larger than loan amount being forgiven. So if there's a shift in the application of what goes into spend, which is what you're talking about, and you're still below your loan amount, the forgiveness application period, which is yet to come, is going to ultimately determine whether they allow that or not. Nobody can tell you that for sure.
Let me also give a little different answer to this. I have not seen, let's say somebody has 10 employees, right? And they have 10 employees and they have a payroll of, let's say, X amount of money. I have not seen anything in that, in the description of that I have read, that disallows someone before June 30th, which is the forgiveness period from it starts from the origination of the loan until June 30th. I haven't seen anywhere in the law to say that if, let's say, you end up firing out of your 10 employees, 5 employees, that you cannot hire 5 employees who are totally different than your previous 5 employees. I haven't seen anything to disallow you to hire different people.
No, you can do that, absolutely.
Yeah. Also, I haven't seen anything in the law to say that if you had an employee that for the qualification period, you paid them, you know, $70,000 a year,
Right.
that I haven't seen anything to say that the forgiveness period, you are disallowed to increase their salary from 50 to 75,000.
Mm-hmm.
I haven't seen anything like that. So I assume that you are able to do both of these scenarios that I said. You can hire different people and you can you can change salaries in these people. But again, you have to maintain a certain number of FTEs and certain number of a less than 25% drop in the monies, in the qualification monies that you pay in payroll, in your W-2 monies at this point.
Yeah, it's all formulas, and as long as you don't break the formula, it will probably go through.
Can we factor in payroll taxes, workers' compensation costs, and invoice costs into payroll costs for determining the first bucket 2.5 factors amount?
Yes on your payroll. What I'm not sure of is whether or not your payroll company's invoice to process your payroll, if that's considered a payroll cost or not. I put it in mine.
Yeah. Good. If they accept it, they accept it. What do companies with over 500 employees get out of this stimulus package, Bill?
There's a completely different part of the law that applies to you.
Yeah. We are getting out of the $2 trillion they gave, we are getting, the small businesses were getting $349 billion. The remaining 1 trillion, gosh, I gotta do the math now, 651 billion.
1,850 billion. 1,850 billion.
Yeah, I don't know where this money, where it goes. 65 billion goes to airlines. Look, I can tell you there are people who are going to make money out of this. I have no doubt. Unfortunately, that's how the system works sometimes.
Yeah, you have your own section of the law that no matter how appealing it was for me to start reading sections that didn't apply to me, I didn't read it.
How about, let's talk about for a moment, and either you can or I can bring the application back. Do you have it available, or do you want me bring it up?
Yeah.
Okay. Let's talk a little bit about the people who have applied for the emergency EIDL.
Yeah, so it is very clear in this interim final rule that you are not allowed to have two SBA loans going towards the same stuff. They double down on clarification of that. This loan, if you took out an emergency loan, disaster loan after January 31st to help you get through the time, this loan is supposed to absorb the principal balance on that loan and replace it. That is part of your loan, maximum loan amount application is the principal balance on those loans that were taken out after January 31st.
So let's talk about that for a moment. Let someone put an application for an EIDL, right? They put the application, but they have yet to receive the funds of EIDL.
Then I think you don't have a principal balance, right?
So there is no principal balance. So they don't have to include it then.
See, but the second question in the question section is specifically about, you know, have you obtained an SBA loan already?
Yeah.
Well, this is about delinquency, right?
So that doesn't apply.
Yeah, but there is somewhere in here it does ask you if you do have another SBA loan.
So let's go back up in the application.
Yeah, see, here it is right here. Any loan, SBA loan after January 31st was for purposes other than paying payroll costs or allowable uses under this law. So your SBA loan that you have cannot apply to the same dollars that the PPP applies to.
Okay, so if you get then an EIDL loan and you use it to pay let's say the fees of an attorney, which is not payroll at this point, or the fees of a marketeer, which may not be part of your payroll or something like that,
right? Then
it doesn't have to go in there.
I believe that would be true, yes.
Yeah.
See right here though, in your thing, there's your plus EIDL net of advance, right? Right here, they're building in EIDLs.
If applicable.
Yep, if you have one. And if you have one that has anything to do with what this has to do with, then this is supposed to replace that.
Yeah. Okay. Let's see. So the payroll is 4119 to 31320. Oh, she is asking about what would be the 12-month period.
Most recent 12 months.
The most recent 12 months. So essentially, if you consider, let's say that you had payroll the 31st of April of March, then you are going to go back to April 1 to April. Yeah, that's correct. To March 31st. Yeah.
April 2019 through March 2020.
Yeah. So that would be the period. I've also heard from people that they have sometimes a hard time to obtain those payroll records from their payroll companies. So you need to talk to them and put pressure on them to really get you the information. I mean, we use Paychecks. We're pretty happy with that. We have a whole bunch of reports already. And they said if we needed additional reports, we'll have them on Monday. Do they ask here to submit actual payroll records? They don't.
Yeah, they do. Yeah.
Paperwork Reduction Act? No.
No, it is. I've submitted all of my payroll reports for all of 2019 and the first quarter of this year. They want to know your payroll spend, your tax amounts, all vacation pay, PTO, all that stuff. They will use that to verify that your ask on your loan amount is legitimate. Yeah, I submitted. Yeah. Everybody just get this application form, get the 31-page thing, read it. Really read it for yourself, and it's in there. They're going to ask you for it. They're not giving you the money without it.
So you can use your IRS Form 941 quarterly. Yeah, I guess you can use your 941 quarterly, or you can use also your 940 annually. But no, actually the annually is not going to work because it's going to start from January of 19. So you want to use the 941s of second, third, fourth quarters of 19 and first quarter of 2020.
Yeah, when do you get that, right? When do you get first quarter of 2020? So yeah. It's
that can be tricky.
Yeah. So one thing that's not clear to me is whether or not the actual IRS 941 tax form needs to be included in your information. If you have all of the detail in your payroll reports, that's one clarification that I don't have.
Let me just show you one more time, guys. Here real quick. Let me go to the website. Oops. Here. Under safephysicaltherapy.com, under resources, we have now all of this information for you that you can download, and you have to your benefit. All of the past webinars and past town halls are here. We have all of the town halls listed here. And we have the tele-PT that we did for billing, the tele-PT webinar for billing, the diagnostic webinar that we did this past Tuesday, and all of the other stuff here. We have listed them. And remember also to register for the upcoming webinar we have on marketing your tele-PT services on April 8th. Once again, because people keep asking me, and full disclosure, we have Costas and I financial interest on hands-on seminars. Hands-on seminars has a pretty good certification course in tele-PT. So if you guys want to learn all of this stuff on how to deliver your telehealth services, you can do that. And those of you who are looking for a platform for your tele-PT, if you go to teleptforme.com, you can get lots of good information there in regards to what makes a good tele-PT platform, and you can get information, okay? Also in this website, under resources, as I said, you can contact directly Bob if you want to get.
Jimmy, can I show the outputs that they get if they
Sure.
submit the form?
Sure, go ahead.
Um,
Oh, I need to, hold on, I need to unshare. There.
So I'm doing this for free, by the way, and there's no fee for this. And I know maybe this is a little bit hard to read, but you send me an email, I send you an invite to a Google survey form, you answer a bunch of questions in there, and then the output is this, all summarized in one page. It will tell you, it starts with your cash on hand. It will tell you what your expected revenue loss is going to be for the remainder of this year based on on questions that you answer about projected what's going to happen going in forward months. It tells you how much additional cash you're going to need to stay above water during that period of time, and before and after spending the cash that you already have on hand. So then it takes all of that information, calculates what your maximum loan amount could be, how much of that is going to become allowable use spend, and how much of it would be forgivable based on all of the inputs that you put in about before and after wage and FTE information. So it asks you every single question you're going to need to have answers to today, in 8 months, or in 8 weeks, in 3 months. It takes everything through the whole period. Then it recommends your loan amount. It gives you how much extra you're going to need to borrow above and beyond the loan that you take, whether or not you're going to include the Medicare advance that's available. And then it converts it all to, and it will tell you what you would need to do in terms of FTE reduction in order to get to the end of the year without going cash flow negative. And then it lays out your month-to-month operation net, what your situation would look like if you don't take this loan, and what your cash flow scenario looks like with the loan proceeds based on all of the answers that you provide for the form. This gives you a forward view into this entire year participating with this program versus not. Anyway, this is just, I did this for my own use, for my own company, to make sure that I understood what my situation was. It's a pretty complicated Excel project to build something like this. I'm not giving out the actual workbook, but you are getting the actual results of the calculations, and I'm just doing this for free. So if you want to send me your email, or send me an email, ask for the form, I'll send it to you, and sometime over the next day or two, you'll get this back from me. It's just useful information to have. Talk to your bank about, talk to your accountant about, talk to your lawyer about, whatever your team is. We're just packaging information that's important to know. I just want people to be at the front of the line.
That's awesome, Bob, and thank you for doing this for everybody. Okay, so guys, the next town hall meeting at this point we're going to do on Monday, April 6th at 1 p.m. Eastern. At that time, hopefully, we will have submitted some applications. I hope that by that time, most of us will have submitted applications. Until then, be well, stay safe, and any questions you have, you can always email to us. I'll put also here my email address and Costas's email address. Be well, stay safe, and have a good weekend.
Thank you.
Bye.